All right, folks, now my next guest, his specialty is reading the tea leaves, and he's going to come and he's going to talk about stocks that he's loading up on. This guy goes for home runs. Dan Fitzpatrick is here. He's in studio. Can't wait to talk to him. Next. All right, folks, it's here. Election season. Don't you love it? That's right. It's official. I mean, think about this. There's a chance that a month from now, we could have the candidates for both parties. It could be a done deal. The question now is, what does it mean for the market? Because we know the stock market anticipates things like this, and it starts to react a long time before the election to potential policy changes. My next guest says, in fact, he's already starting to see it. I want to bring in now stock market mentor, founder, and CEO, Dan Fitzpatrick. Dan, thanks for joining. Great to be in your town.
Thank you. Thank you very much.
What happened to the sun?
I don't know. Well, it's out a little bit, a little bit more than New York.
A little bit. Yeah, well, then that's an easy comparison.
That's not saying much.
Yeah. What's up with a couple of weeks ago, former President Trump said the market was starting to go higher, move higher, based on polls suggesting that he would win the election. We do know that the markets move before the election. Certain parts of the market move before the election. In fact, if you look at solar stocks, in the election year that President Biden won, they went through the roof.
Sure.
Yeah.
Sure. Look, I like President Trump, but I think it's a little bit early to talk about anticipating his election by looking at the market. The market typically, the way I look at it, is maybe 6 months in advance. But there's other more important things. There's interest rates. There's what the economy is expected to do. What's the Fed going to do? It's not about Trump right now.
One thing we do know is that the market does pretty well on election years, and particularly when the incumbent is running. In part, I think that's because government spending.
Yeah.
Right? They're going to spend as much money as possible, flood the zone, try to get money in everyone's pocket so they feel a little bit better when they go into that voting booth. The problem, though, this year, and you just mentioned the Fed and rates, if the Fed is trying to push back against that. The Fed doesn't want all his money, so it feels like it's a real thorny situation.
Well, it is, and I think anybody who leans one way or another and says this is exactly what's going to happen or that's it, they're guessing, because it is this push-pull. Powell's trying to keep inflation down. On the other hand, Congress, the administration is trying to boost prices. They want everybody feeling good, and that means pumping a bunch of money into the economy. And those two don't work. It's kind of like dry and wet. They don't go together.
Right.
And so that's going to be an issue. I don't think we're going to have a lot of rate cuts this year, but I do think Powell's probably going to start. I don't know when they're going to start. That's been a losing game to predict.
But you also say that people who are rooting for 6 rate cuts have to be careful what they're rooting for.
Well, that cheerleading has been going on for so long. It's a little bit like the broken clock. Ultimately you're going to be right, but 6 rate cuts this year, I think that's nuts, because why would they cut 6 times? The only reason they would cut 6 times is if things are really, really bad. And if things are really, really bad, I'm thinking more about investing in Smith & Wesson than Microsoft.
Right, if they're that bad. I mean, the economy is falling apart.
That's exactly right. And that's not going to happen in an election.
And nobody wants it to happen, right? I mean, it's nuts. I mean, no investor wants that to happen. No. So don't root for 6. 3 in the back half, maybe.
I'll take it. I'll take it.
Hey, before I let you go, you always come up with these interesting individual ideas. Ramaco's a name that you like. It's a coal company.
Right. Yeah, I really like that. They've got a very, very conservative balance sheet. They're in West Virginia and Pennsylvania. They're doing a lot of rare earth metals as opposed to just coal. They've got a lot of intellectual property. They finance a lot of their own operations. They don't really have much debt. At all. And so, you look at the stock continues to move.
This is coal for still, right? Which is going to be an area. And we're talking about all the government spending. A lot of it's going to be on, we're already seeing a manufacturing boom.
That's right.
So, yeah.
And they're also working in renewables as well. So they're kind of, the double whammy. I really like the company. Big dividend.
Symbol METC?
Yes.
All right.
Yeah.
Dan, great seeing you, my friend.
Thanks a lot, Charles.
All right, folks.